To welcome to the stage, everybody, our moderator of our next panel. He's a 10-year Bitcoin veteran, and he believes that BTC is the reserve asset of the internet economy, right? And the most pristine form of collateral. Someone wrote that very cleverly. Everybody, welcome to the stage, CJ Konstantinos.
Hello, everybody. Welcome to Miami. Woo! All right, get some energy in here. So today, Bitcoin, liquidity, derivatives, risk management, the most boring things you can talk about, right? This isn't going to be fun, but we have a lively panel. So let's bring them up. A couple things we're going to be talking about today. These guys take their spots. Bitcoin and corporate treasuries. Real-world examples of Bitcoin being used for risk management. How you can incorporate Bitcoin into your portfolio for risk management. And we're going to hop around on all these topics. I'm sure I'm not going to let these guys get away too easy. So I'll throw some questions in there as well. So let's kick this off with some self-introductions, going right down the line.
So Chris Sullivan, portfolio manager, co-founder of Hyperion Decimus. This is not a stat I like admitting, but we are the third eldest crypto hedge fund or Bitcoin hedge fund on earth as far as like audited funds. My background's in volatility trading. I have every series ever invented, a charter market technician, 2 masters, and a partridge and a pear tree. You may have seen some of the Breed Love work I've done. I've been on Truther and Freedom podcasts for the last 6 years. I'm an Austrian by training and, bleed red, white, and blue. Thank you.
Hello? Oh, there we go. It's working. Dimitry Chesnokov, client success director from sFOX. So my background is I come from TradFi, spent some time working on Wall Street in foreign exchange, and moved away from that into crypto and worked with some startups in ICOs and ended up at sFOX, where provide prime brokerage solutions to institutional clients to be able to basically buy and sell cryptocurrencies.
Hey everybody, good morning. Yeah, give a round there. There we go. Good morning, everybody. John Devine here. I'm from BlockFills. We're a market maker, an institutional liquidity provider in Bitcoin and other digital asset markets, primarily focused on options, structured products, futures markets, of course, the spot asset, Bitcoin itself. My background is precious metals market making and interest rate market making before I came into crypto and joined the good side.
Mike McGlone, Senior. We got this. Mike McGlone, Senior Commodity Strategist at Bloomberg Intelligence.
Told you guys this was going to be a boring group, right? So let's kick it off thinking about the role that Bitcoin is going to play, not only in the near future, but in the long-term future. And that is the role of Bitcoin in corporate treasuries. Where are we going? Where are we at now? What's in the way? Is there anything in the way that we should be worried about? And what's the future look like over the next 4 years, next halving cycle?
Boy, I was afraid you were going to start with me on that one. Let's look at it this way. Michael Saylor with MicroStrategy is a bit of a one-off. You always have to have a leader, but I like to tilt back what Saifedean Ammous wrote in his book, The Bitcoin Standard. At some point, Bitcoin's going to be part of central bank holdings. So he's kind of trickling that. I read that book in 2018. I thought, no way, and his nose out like a convert. Now I see it's happening. It's going that way. So I don't know exactly about being part of corporate treasuries, but one thing I do enjoy about these panels and events is I get to meet really cool, smart people. So one thing Chris and I have in common is we're both John and I have common is we're both ex-Chicago Board of Trade pit traders in the pits. And there, it's all about trading. That's one thing that I saw in Bitcoin right away. Yes, it's everything. It's becoming an asset that we can hold for long-term appreciation, but it's also the most widely traded, indisputable, 24/7 traded risk asset on the planet. Right now, if there's something going on in the world, you could buy or sell Bitcoin. You can't do that with any other liquid asset. It's just unstoppable. So guys like me and John, both from the trading pits, migrated that way. And this is the key thing I see that's so important in this space. So here you're going to hear a lot of things like the macro. The corporate treasuries, yes, it's going to be coming, but it's going to take a long time. You have to have something who completely controls the board, and Michael Saylor does. But in terms of risk asset trading, it's indisputable. And that's where I see the ARB is just getting started. So remember when futures started in 2017? That's when volatility started to get squashed. Now there's still massive ARB in this trade. And that's why I look at it from an institutional standpoint over the top, and Chris is involved in that, is it's only going to get lower volatility. It's only going to continue to become more like gold. It's just going to take time to get there as institutions get in there and arb it out. And I didn't want to go that way too much, but corporate treasuries are part of that. It's just, don't underestimate how this on a trading scale, on a global scale, is just here's one thing I'll end with that I find shocking is your average person in Asia will trade Bitcoin using US dollars. In America, were you dumb enough to mess up an asset that went to the dollar as its base layer, crypto dollars, and that's investing in U.S. treasuries? So we heard a little bit of discourse on the other panel, but to me, that's where this space is going.
I think that's 100% correct. And also on the corporate end, why there's a little bit of spark is not just Saylor's tutelage of folks in the events that he has, and then there's a few first movers like Block and like Tesla, but as more and more awareness is permeating about this legal construct where you have nothing. So Klaus Schwab said that at the World Economic Forum because he already knows you own nothing. And that's legally permeated across the planet. It is UCC Articles 8 and 9, the updates to the safe harbor provisions, which do not create safe harbor bankruptcy for you. It protects these central counterparties, the protected class of creditors globally, which are just an offshoot and subdivision of the central banks. And the enemy of all that is good is central banks. And while I agree with Mike, there is an iteration where central banks are forced to hold them on their balance sheet as collateral as they are constantly buying gold with money that they conjure and counterfeit is just for their own survival. And I'd really like to see why Bitcoin's full thesis realized, which is to replace central banks. Largely, the entirety of the bailout structure, the entirety of misery is created by unsound money and the weaponization of the bureaucracy that spins up aside it.
Yeah.
Before you hop in, I want to table this topic because we were talking about this beforehand, where is Bitcoin going to be vertically integrated or are we going to see a complete separation? So I definitely want to come back to that, but go ahead, John.
Yeah, I mean, so here's where I see the crux of the issue in terms of Bitcoin being a treasury asset. It's right now when you have when you're running a treasury at a corporation or a pension fund or whatnot, and you have dollars on the sideline, you don't know where to park those dollars. You typically buy treasury notes so you can get some type of yield. But this is the system that we need to dismantle. The treasury market has been completely corrupted by central bank interference and over leveraging of governments and all this other stuff that has been very well covered even in the
John,
first.
you mean do we borrow money in the currency we can print?
Yeah. Yeah.
Anybody got a problem with that?
Yeah. Exactly. So what can we do from the individual perspective? I think the first panel covered very well what we can do as individuals. But from a corporate perspective, we need to stop buying treasury notes and funding perpetual warfare and supporting this nonsense system, right, that we've all been identifying. And corporate treasuries need to start buying Bitcoin, okay? And they need to opt out. And I think when we go to Bitcoin conferences or we talk to Bitcoiners, it's easy to demonize corporations or big entities that make lots of money, but these are going to be allies in the revolution from dismantling the current structure that we have of treasury bonds, printing, spending money on war. These corporate treasury managers are going to be allies to every one of us in the room as we make this transition and go on this revolution. So how do we convince corporate treasurers that this is a balance sheet asset? Well, I think what when we get into the risk management side of Bitcoin, it becomes incredibly obvious. If you want to outpace inflation, opt out of the current system, Bitcoin on the balance sheet makes a ton of sense.
All right. So yeah, I'm pretty much agree with everyone here. Just to add a little bit more, I think in terms of, I think Mike mentioned in terms of volatility, it is something too important to keep in mind as well as these corporations are going to be getting into Bitcoin. First of all, Bitcoin is very volatile at the current stage because it's going through a lot of price discovery given what's going on right now. So I think as the asset class matures more and that volatility becomes less, naturally I think the corporations will come there and get exposure more to that, because I think at the end of the day they also have to manage risk on their end. And Saylor, he's obviously a very risk-on type of guy. And he's genius for doing what he's doing. It's a proof of concept, and everybody's watching that very closely. But I think at the end of the day, it's multiple things like liquidity and volatility that is maybe not attracting corporations at this point in time.
Dimitry, what's volatility? Don't define it.
Volatility, the changes in asset price.
In what terms?
In dollar terms.
Right.
Yeah.
So should we maybe invert our thinking? Does anybody know the annualized loss in purchasing power of the dollar since 1913?
So before you answer that question, what's the interest rate? So I just want to go there a little bit, Chris.
I was getting there, Mike.
Yeah, but most people, I want to interrupt because before you mislead our audience, which a lot of Bitcoin people do, is right now, we got to point out facts. I can point out facts about corporate treasuries now. Right now, with the U.S. government T-bill, I'm guaranteed, if I clunk down one Ben Franklin, which is $100, I get a Ben Franklin and a Abraham Lincoln in a year from now. Guaranteed 5%, guaranteed. So people always say, yes, I agree with you. There's an issue there. But one thing to remember is right now we're getting 5% guaranteed in the U.S. government T-bill. In China, you're getting 2%. In Europe, you're getting maybe 3%. In the rest of the world, in Japan, you're getting nothing. So that's an unstoppable force. But one thing I want people to point out is I want to ask everybody in the room, would you use Bitcoin to buy anything? If you can use a dollar.
That's awesome.
Okay,
Mike.
why would you depart with your Bitcoin when you have sound money? You can use dollars that are deflating.
Because it gets rid of people like you.
Okay, so why do you want to get rid of people like me who points out facts?
Because you want to use a system to control and socially manipulate.
Okay, so we'll go on to the panel real quick. I just want to point out, though, the key thing about the dollar and currency is you have to have something you want to spend. Maybe it depreciates a little, but if you have something that's actually going to appreciate in value over time, why would you use it to spend? So it's in between there. Just we don't want to depreciate too much.
Right. Well, you've got both Occam's razor and the Hegelian dialectic, and Mike is pro Bitcoin, Ben. Yeah, but what most of us don't understand are facts, and I'm pretty sure a fund up 1,000% in 5 years isn't going to mislead anyone, because you don't do that by misleading people. And there's only been a handful of funds ever that have done that, including RenTech. So despite the implication, it's 11.24%, Ben, that we've lost the purchasing power since 1913 annualized, and 48% since 2020 So why
And that's
I brought
what a
up
2%
volatility-
target, isn't it?
Yeah, I mean,
2%,
2 would be
2%
great.
target. Yeah, we're up over double digits here.
Let's mull over the fact that all the government reported numbers are false. And so it's very difficult for someone like me, who is a fiduciary, who collects macro data from Bloomberg that is accurate, yet then you go extrapolate that to the Department of Labor number, and you're like, all right, well, that's not even 3 standard deviations away on a daily bar. Like, truth is really difficult to find, and that's why Bitcoin is part of that matrix. But the point about volatility is, like other, call it catchphrases, it's used to induce you into inaction. And volatility itself, if we're going to get into physics, is actually an asset class in and of itself. It creates opportunity. So the other phrase that goes along with volatility is the word uncertainty, right? Well, guess what? There's no fucking thing like certainty. That doesn't exist. And I get really frustrated with this, because I'm trying to just relay facts, Mike, and people are induced by fear and a price action that they're misinterpreting, which was my whole point about volatility.
So much for saving that integration to the end, huh? So, a couple things here. Mike, you take that $100 bill and they put a Abe Lincoln in your pocket. But from the other pocket, with their other hand, they're taking an Alexander Hamilton. That's the big problem here. So you end up net negative. Real interest rates are negative. There's a negative carry when you look at the real data. That real raw data is not manipulated. It's accurate raw data. It's the methodology that they're using that gets changed. How many times have they changed that in the past couple of years? 16 times. So you start at one point and you end up at a different point where you say, wait a second, if we were doing it like we were here before, inflation is 11%. And I'm lending these guys money at 5.25 to 5.5%. I'm an idiot because I'm getting a negative return on where I'm trying to store my value.
Guaranteed negative return.
Guaranteed negative return. Now, the second thing is that you said was 24/7, 365 liquidity. That is a beautiful thing. And I recently saw a news story where apparently these markets are now considering 24/7 trading for stocks.
Well, that's just a matter of time. So that's one thing that I like to push back on people who don't listen, and that is the technology is revolutionary and overwhelming. It's a matter of time that you'll be able to trade a token on virtually every risk asset on the planet. Yes, they'll push back. Of course, that's what establishments are supposed to do, just the history of rapidly advancing technology. Right now, I can get access to the US dollar every place in the world on my phone, Tether. Tether, the US number one trading token, is the number one traded crypto. It doubles the volume on a typical day of Bitcoin. It's the dollar. The whole world's gone for the dollar. Why? Because it's the least worst of all the other fiat currencies. So we can push back on the US dollar all we want, but go try to live in another country and see how that does. We had a panelist who was in Argentina recently. So that's the key thing I want to point out is, number one, the technology's gone for the buck. All these assets in crypto dollars are invested in treasuries. Okay, so it shows the system, it's just the best way now. Now, we have to be careful with extremists in Bitcoin. So a key thing I want to point out is what's happening on a global basis right now. Central banks are printing money and buying gold at the most colossal pace, which is close by the World Gold Council, at the greatest pace ever. That makes sense. Eventually, as we agree, that's kind of a risk to not have some Bitcoin in that space. I get there, I agree. So I'll end with this. It's volatility. So please be concerned about most people in this room, I'm sure, are holding Bitcoin. Be concerned about beta. Here's the number, $55 trillion. What is that money? $55 trillion is the total market capitalization of the US stock market. It's 2 times GDP. That's the most since 1937. That's how expensive everything is right now. Bitcoin trades 3 times the volatility of the stock market on a normal basis. So when, and I didn't say if, when the stock market has a normal correction versus GDP or versus all these other measures, Bitcoin's more likely to go down initially and then come up. Gold is more likely to go up. I'm just a strategist. I don't have a position. I'm just pointing out that that's what we have to be concerned about is Bitcoin still has a higher correlation to beta, which is a stock market, than to gold or treasury bonds.
You know what the current number is, right? 0.18 is the 90-day rolling
Of
Bitcoin's correlation to the
okay,
S&P.
so that's the key thing about correlations is that's the 90-day rolling, but let's look at the facts of what happens in big moves. The S&P 500 corrected 25% in the last big move, right? Bitcoin corrected 80%. It typically trades 3 times. That's just the way it works. So my point is that stuff is great for people who trade intraday like you guys do, but for the maximum people who are holding positions who are not looking to do anything but reallocate on a 1 quarter basis, you have to be concerned about that height. Okay, here's a question for you, Chris. If you have a 50% correction in the stock market, or 10%, evaluate risk model. I'm sure you've sat in front of a value at risk model. Put in your model S&P 500 down 10%. What does that do for Bitcoin?
It's changed over time. In 17, 18, it was 3.2. In 22, it was 1.76, and right now it's less than 1. So we just have a MVAR model, modified value at risk, that updates on every 1-minute bar, and it adjusts. So we do it for its predictive properties as well as its risk management thresholds. But I think what's changed with both narrative, which is how humans operate, and in the regular buyer of Bitcoin has gone from more like where it's set, call it 70% risk speculative traders, 30% long-term holders. Now that equation has flipped. It's 74% long-term holders and 26% speculators. So that's why the correlation's gone down. That's why the vol, which was 96, is now 55. And that's all, again, in dollar terms. So it's just going to continue to evolve. And eventually, you see an instance where it goes up when everything goes down. Gold has both in its price history. Just look at March 23rd, 2020. Everything puked, right? Treasuries, junk bonds, stocks, Bitcoin, gold, right? That we call a liquidity drain. Likely that is the event that makes everything in fiat go down, no matter what you think it is, even houses, right? Houses are fluctuating in value daily, by the way. You just can't see it because you don't get an NAV. And like the first panel said, they're poor investments because the carry offsets all of the illusion of gain. So hopefully that addressed and clarified the points you're making. But we as human beings have to choose, right? And the whole problem with treasuries is that it's not the dollar itself, it's the system. Like when we bear the burden of debt, it's our neighbor and their grandchildren's grandchildren that's oppressed by it. It's not that we want our greenback to be worthless, right? So it's the system that I think we all stand here against, not the paper itself.
How about you guys in the middle? A lot of head nodding, but
No, look, I mean, these guys are on it. The problem with the way you guys are talking is that most people just aren't going to be able to follow you. Right. So how do you take these concepts and simplify them? And this is where I go back to we need to ally ourselves with guys like that are on this stage. Okay, when I come to these conferences, oftentimes guys on this stage talking about these topics are kind of viewed as, I don't know, not allies, right? But without this type of thinking, we cannot convince the largest capital managers in the world about why they need to be diversifying and eventually really taking on Bitcoin as a core asset in their portfolios. These guys are extremely important for that conversation. How do we, Chris, I'd almost go back to you. How do you take these concepts and bring them down where everybody can get on the same page with what you're talking about?
yeah, let me jump in real quick for you because I think I'm going to steal the answer to this one because we see two all-stars here. We see two superstars here coming from different sides of the spectrum. One completely anti-system, this is fucked up, and I don't care about anything, we need to get rid of it, which is valid, actually. It's a valid argument when you look at the data and the statistics and the amount of wealth, the time and energy of workers that is being ripped from them. This is immoral. From the other side of it, we have a chance to fix this and take more of a relaxed approach. So I would simplify it down like this. Are we going to go to these big companies and are we going to tell them, look, here's the math. This is where it makes sense to put Bitcoin on your balance sheet. This is what it's going to do for you versus fuck the system. And then on the other side of it, when you say that, it kind of comes off as like a speculative attack on the dollar. So do you think like all these corporations are going to accept or bring in this idea of, yeah, we're going to make a speculative attack on the dollar?
CJ, they know this. This isn't speculative.
Yeah. But from their side of things, we're orange-pilled, right? We hand out orange pills.
I talk to the S&P 500 companies. I've consulted to them my whole entire career. They know, trust me. That's why they've offshored their tax liabilities. They've offshored their production. They mitigate logistics issues. They offshore their manufacturing. They know.
So where are they holding their Bitcoin?
Some do offshore, and we don't know. But they're terrified of a tyrannical regime bankrupting them by whim. It's not like the managers of Intel or Triple M or Caterpillar do not know what they're fighting against. They know the game of the central banking era is convert fiat to assets, convert fiat to assets. That's the game, right? That's been set up for us to all play, willingly or not. They just haven't acted on their awareness of such because they're afraid. And we can forgive them from that. And John's exactly right. Like, I'm not here as like an evangelical for Bitcoin. I'm a freedom maximalist, as most of us are here. But my hedge fund exists to allow institutions and family offices and skeptical investors to deploy their capital in a capital markets strategy way with similar alpha concepts that they're familiar with to allocate away from fiat assets. Like the denominators for stocks and bonds are what? Dollars. So it's a 50% synthetic to that. So you really have to look deeper into how you're going to get returns above inflation. So I didn't, of course it upsets me. I have kids and I want to have grandkids, but I don't want to paint myself as like a F the system, although it should be obvious to any sentient being.
I just got to interject one thing, and we probably should tilt to Dimitry to make sure you have your voice. 2 words, time and patience. It's happening. A year ago, we didn't have Bitcoin ETFs. Now we have the biggest launch ever of ETFs in this country. Michael Schoenstein, a friend, head of Grayscale, Profiles in Courage. He sued the SEC and won. We're there. It's happening. It's got to give it time. But a typical corporate treasurer is not going to listen to people like us. I mean, their whole lives are about educating themselves about how to properly do this. If you have $100 and you can guarantee of your corporate money, you can guarantee a year from now you can get $105, you might put a fraction of that in Bitcoin. We're not going to take the risk, but it's only going that way. We just have to have patience, give it some time. That's why I look at right now, let's look at the macro, big pictures. We are just on the back end of the biggest money pump in history and the biggest related inflation ever for most of us. And it's just starting to tilt downward. And the lessons of Jeff Booth, The Price of Tomorrow, I knew that would get a smile on you, was we're all about, humans are about error correction. We made the error. We know the error of too much liquidity. So what's the normal tilt? I write about this, and I fully expect people on the terminal like you and government officials see it, that the next tilt is we go back the other way. Rates went up real fast. Now we're tilting towards disinflation. It's going to tilt towards deflation. Just the way things work. And what we're going to hear for the next decade is, we can't cut rates too much because look what we did last time. We made that mistake. So to me, that's what I'm worried about. Bitcoin's going to benefit in that, but I'm still biased towards gold, Bitcoin in that space, and long bonds.
So this is an interesting concept because I talk about price discovery with gold. And we heard Nico up here earlier saying when the price of gold goes up, the supply of gold can go up because of the profitability driving the production. But in Bitcoin, when the price goes up and profitability goes up, you can't create more Bitcoin. So you create more hash rate. But when you create hash rate, there's something called the difficulty adjustment. And the difficulty adjustment goes up, which increases the cost of production of Bitcoin. Now, in the long run, all commodities prices will gravitate towards their cost of production. So I think there's a very interesting element in Bitcoin that we don't see in any other commodity in the world, where it's basically its own price discovery mechanism. The more the hash rate goes up, the more the difficulty goes up. The more the difficulty goes up, the more the cost of production goes up. And what we have is we have this free market price discovery cycle where sometimes price is at a discount and we get a little bit of a pullback in hash rate. But most of the time what we find is price is at a premium. And what that does is it keeps building hash rate and pushing up. So when we talk about volatility and we talk about price discovery of Bitcoin, I'm seeing that element that I don't see in any other asset in the world. And maybe that's more sellable and engineered money than an attack.
Yes?
Yes. Okay. I was hoping to get something out of these guys. Come on.
It's the number one thing that captured me 2017, definable diminishing supply. I remember talking to some big hedge fund guys about this. They can just bring on more supply. I'm like, no, 450 a day, that's it. Okay, then all that matters is demand and adoption. Those are going up. So as a long-term view, price must go up over time unless something goes wrong.
That's the magic of it. And the opposite for bonds. Price is going down.
Bonds are negatively convex, so they're automatically the opposite.
Destroyed. But you said something interesting, and that was, we can't bring interest rates back down, but they really can't bring interest rates back up, and they're going to have a really hard time keeping them where they are. So let's bring the audience in on this. Show of hands. Who thinks that interest rates are going to go up going into the election? Couple hands. Oh, John changed his mind back there.
CJ, front end or back end? Front end or back end?
Right? We'll get to that point right after this because we're talking about a free market versus a stated rate, right? Yeah. So who thinks interest rates is going to go down? Okay. Most people think interest rates are going to go down. Okay. So if interest rates go down, correct me if I'm wrong, panel, But all of that principal sitting on the sideline who is waiting to get that Abe Lincoln in their pocket, who's no longer going to want the George Washington being stuffed in their pocket while they're still getting a Hamilton taken out of the other
George
pocket.
Washington.
Yeah. All that money goes rushing back into hard assets. So they can't lower the rates. And if they raise the rates, well, look at the government's interest rate expenditures. Those are going to go through the roof, which is going to require more monetization of debt. It's going to require increased liquidity, AKA it's going to require inflation to service. So we're stuck. They are really stuck. Is Bitcoin the light at the end of the tunnel? And this is that beautiful point of integration. Can we use Bitcoin to escape the proverbial end of the road?
It's the tunnel, but let's do a demo. So full disclosure, I trade every day with these two guys. I'll give you one scenario with Dimitry and his team, which is a great qualified custodian and a super clean elder exchange too. And they pioneered long short trading with us. So I'll get to John right after, but we take our Bitcoin. This is how holistic this is, and this is why I call it the tunnel, and maybe some other assets. We can post that to their qualified custodian, and it can be borrowed for liquidity providing on either end. Someone wants to be 130 their risk, or they want to short it, and we all agree on a market-based rate. So, it's a function of time and collateral, right? So we get a yield for posting our Bitcoin. If I want to borrow it to short it to hedge our portfolio, I've got to pay that yield. In the scenario with John happens to be a thermodynamics energy expert. What do we do, John? Because what is the natural state of markets? It's contango, right?
Yeah, contango.
And why is that?
But time has a price. But we have to explain what contango means.
Contango means that futures outdated are slightly higher than the ones that are near dated, right? So as such, options and derivatives price off of time. And Bitcoin encapsulates time preference better than any asset on the planet. But what do we do to both get back more time while also hedging? And I literally did one of these trades with them yesterday.
What are you referring to, selling puts?
Yeah.
Yeah, so do you want to get into the advantage of selling put options to establish a Bitcoin
Since
position?
that's an example that would make sense.
Okay, so let's talk let's talk markets here. So we're all here to buy Bitcoin and buy more Bitcoin. How can we use these financial instruments that Chris is talking about to help us acquire more Bitcoin? When he's talking about contango and the time price, the time value of the value of time, we're talking about Bitcoin today would be a spot market transaction. You go buy Bitcoin, that's a spot market transaction. But what about Bitcoin to be delivered on May 31st, or Bitcoin to be delivered in June or in July? This is the forward curve of Bitcoin. Bitcoin's a commodity. If we're gonna be in Bitcoiners, we have to understand commodity markets. Okay, keep going on your education journey. You've already gotten to this point. Keep studying commodity structure, market structure. What can you do in this scenario? I can buy spot Bitcoin, I can sell forward, and I can create myself a yield in Bitcoin, okay? Now I have an interesting position I'm long spot Bitcoin, I own the asset, I have the obligation to sell it forward, I get paid in Bitcoin for that obligation, right? Now, to go further, what Chris is talking about, selling put options. I'm not gonna give you the spiel, but read my book, Bitcoin, all right, yeah. Bitcoin options, okay? You're talking about a commodity asset here. Educate yourself on the tools we can use in commodity markets to help us acquire more of that commodity, okay? When you sell a put option, you are obligated to buy the asset at a specific price. Let's say you want to buy Bitcoin at $55,000 this month. We're in the month of May. The month of May options expire on May 31st, the last Friday of the month. I can sell a 55,000 strike put option, which obligates me to purchase Bitcoin at 55,000. The buyer of that contract has the right to sell Bitcoin to me at 55,000. The buyer of that contract is going to pay me a yield in Bitcoin for the obligation to own Bitcoin at 55,000. Doesn't that sound like an interesting way to buy more Bitcoin? Obligate yourself to purchase the asset, get paid day one for that obligation in sats, and keep going. If we don't go to 55 this month, you just keep those sats as premium and you do it again for June. Maybe you sell the 50,000 strike for June. All right? You have an obligation to buy Bitcoin at 50,000 by June 26, and you get paid in Bitcoin. This is the stuff that I think gentlemen like ourselves up here have an obligation to share this knowledge with the Bitcoin community, because in traditional markets, they don't want to teach you this stuff. They just don't want you to learn about the game inside the game. All right? As Bitcoiners, we're open to educating ourselves. Let's take it further. Let's figure out a way to play the system while we're still in the system to continue acquiring more sats.
It's so egregious, John, that our headquarters are in Winter Park, Florida. Do you want to know how many non-accredited investors have tried to get into my fund? Where, as a business owner, it's my decision on my own margin whether I take them. Could anybody just pull a number out of your hat and spit it out in fiat terms? Over the last 5.5 years, how much willing investors I've had to turn down because the SEC says so? It's $91 million. I have a spreadsheet of over 600 investors because I'm a meticulous quant. So imagine at 2 and 25, how much money my team has lost and how much money those investors have not gotten out of that. That's how this is so corrupt. The reason they put a $250K and accredited investor minimum on hedge funds is so you don't get to invest in us. And it's just ridiculous. But Mike, since you're an expert in commods, we dropped 500 bips, implied went up 7%. Explain why we became put sellers yesterday to tactically take advantage of the skew.
Well, first I have to respect my panelists who actually do run money. I'm an ex-trader. I used to have hair. So
I'm catching up.
Put selling is an ideal way to get long taken income, and you're doing it partially because markets are beat up a little. So you see the market going down to support, you sell some puts because they're kind of expensive. You take in that premium. If it goes to the strike, you take the position, you want that position. But that's a key thing I want to point out what's happened with Bitcoin lately. As a markets guy, we had a perfect storm for a new high. The ETFs are launched, the halving, and beta was on its tear. That's all. It's a hangover right now. You're getting the hangover. What's the next catalyst to make it go higher? I don't know. I'm worried the major catalyst that might push it lower is beta going down. Now, I've been a little bit early on that, but that's to where we are now. But from a long term, people here, except if you're spending it to buy stuff, shouldn't care. Should just wait for dips like you are and just accumulate more. To me, that's the way I look at it. But you have to understand it's a volatile asset, and don't let it shake you out.
So what do we have in common here from what was being said? Yield. Everybody is chasing yield. Everybody is chasing the cash flow. And Jack, maybe you could put up that slide I have. But while you're doing that, so what's really interesting is Bitcoiners are starting to figure out that strategies like John had mentioned, which should check that out because this is a great yield generating strategy, especially as you're getting paid to accumulate the corn. That's the goal, right? Hold as much Bitcoin as possible. If you can get paid to do it, winner, winner, chicken dinner. But what we find out is that in traditional markets, they just made it easy. Just buy our bonds, right? And this brings us back to the yield curve, to the long end or the short end. So we'll do this question one more time. Let's see if they can pick up on this. If the Fed states the rates lower, do all interest rates have to come down? If you think yes, raise your hands. We got a really smart, sophisticated room here right now.
Everybody expects a bear steepener? Wow.
They don't have to go down, but they typically do.
They typically do, especially on the short end, because that's why they call it the anchor rate. But really, the long end of the curve is the free market end of the curve.
So let's point out one thing about the long end of the curve right now. U.S. 10-year in a 10-year government bond right now, you can get 4.5%. You know what is in China? 2.3%. It's plunging. The second largest economy in the world is going to a deflationary recession. And the U.S. potentially is tilting that way.
Yes, it could be. But with the other elements that you take into account, like a $3 trillion running deficit.
So let's just compare that to Japan. It's about almost 3 times GDP, the debt to GDP. In China, it's about the same. In the U.S., I agree, it's high, but we all turning Japanese. That's the trend at the moment.
So all of these currencies are really attached to the dollar, right? The dollar is the head honcho. Yeah. They're all, in some form or another, a derivative. And the point I wanted to make is, if you guys look on the screen right here, this is a 10-year chart showing you that in a traditional 60-40 portfolio with, like you mentioned before, quarterly rebalancing, you're at 71%. But if we use a 2% target inflation, you're much less. But if you use real inflation, you're still negative. So prices are going
So
up
how do you
in
define
nominal
real
terms.
inflation versus T-bills?
Now, I would say real inflation is going back and using the cost of goods index
Okay.
versus the cost
So
of living
I want to point out
index.
when people push back in CPI, you know the price of natural gas this year dropped to was first traded in 1990. Natural gas is the #1 measure of heat, electricity, and fertilizer in this country.
And it's negative.
That's severe deflation. The price of crude oil, you see on the screen right now, $78 a barrel. It was first traded at the price in 2007. Imagine if we said that about the stock market. In commodities, from my standpoint, it's severe deflation. Except for
I
one
absolutely
commodity coal.
agree with you. But if we're seeing severe
It's a
deflation,
120-year low, Mike.
severe deflation in commodities, what's happening? How can the economy be slowing down and prices still be going up?
Well, let's look at deficit spend. We all know what's happening. That's unprecedented. We've running 6% or so debt to GDP. It's the most outside of war or recession ever. And it's part of the reason we tilt towards Bitcoin and gold. That's unstoppable at the moment.
So stagflation. You'd say
Well,
we're
it
in
is, okay,
stagflation.
according to Chairman Powell, it isn't, but let's consider 70s stagflation. Right now, CPI is 3 to 4%. Okay, that's not so great. But stagnant, where GDP is running 2% or so. I mean, in the 70s, it was much more than that. The key thing is, where's the tilt? It's all heading lower. And the Fed might ease, but only to ease if the market makes them. That's the problem right now. When you get the stock market at 2 times GDP, it hasn't happened since the 1930s. It's all that matters.
That probably is one of the most important things you can take, and we got a question, I'll come right to you. One of the most important things you can take away from this panel today, in my opinion, is the yield curve being inverted. And that's the market telling us we see deflation coming. This is what's going to happen, so we're preparing ourselves for a deflationary event. But I think that actually offers the best opportunity in the marketplace today, because I think they're off sides. They are off sides on this yield. And when the free market realizes that we are not going to get 2% long-term inflation, we've never had 2% long-term inflation. That target has never been hit, no matter which time period you take. It's not going to hit over a long average like you see here with these 10 years. So kind of being aware that if the market flips its mind, if it changes its mind, if it loses that trust in this deflationary narrative, the long end of the curve, what do you say? 7.5%, maybe 9%?
8.9 is the target.
So you can say, if I can get hit by a car on the way home, but what's the probability of that? That's my point. Is where's the rest of the world tilting right now? Much more indebted countries than the U.S. are completely dependent on exporting to the U.S. Their bond yields are plunging. So I look at it from a macro standpoint. You can act like you're a good macro bond trader. If you look in the world, there's only one good place you can get the deepest market in the world and the best returns. That's U.S. long bond treasuries. If you go to Japan or China, even Europe, you're getting nothing. That's my point, is in a macro standpoint, you need to shift to tilt towards reflation. And just remember what we're in the back of, the biggest pump in liquidity that's still going down. It's the high price cure is just getting started. You need understand the cycle. The cycle's the wrong way right now for that scenario.
You want to do a question, CJ? Sorry,
Yes,
Chris.
I'm sorry, let me come back to you. With her
We're
beautiful
here.
art, by the way. You got to check out the art over on the other side. Beautiful stuff.
That's right. Here. Oh,
There was this headline by Marty Bennett, possibly the U.S. bails out Japan, and bailing out the banks is cool, but bailing out the central banks is even cooler. That was it.
it's okay.
What do you,
So you had brought up the yen, and Japan is like the biggest holder of U.S. treasuries, right? So if we're starting to bail out Japan,
No, that's remember, that's one person who needs to get hits, I think.
I just
So.
want to hear your perspective.
So here's the facts, what's happened recently. The problem in the world right now, it's always been the history of the dollar's too strong. Okay, it's not the best system, but give me a better system on the planet. The dollar's at 10. Well, exactly. It's getting there. But so here's what's happening. The Japanese currency is melting versus the U.S. dollar. Virtually every currency is melting versus the U.S. dollar. So there's been intervention to support it. The U.S. didn't support it. There's been notions that Japan's supporting their currency. China's supporting their currency. Why? They have to, because they're nowhere near comparable to the strength of the U.S. dollar. And you guys should get this from cryptos. Why is there $110 billion in Tether? It's not in the yuan or the yen. This whole space has gone for the buck. It's unstoppable. So my point is, our system's bad, but everybody else is worse. And that's the problem right now, is unless we have a decline in U.S. rates, which might be led by U.S. stock market, which is the lose-lose, the dollar's going to continue to break things. And it's breaking the yen right now, it's breaking the yuan, and it's probably going to be the euro next.
It's the cleanest shirt in the dirty laundry, right, as they say it. But
Everything Mike said was accurate. But the distinction I think you might be looking for is that our Federal Reserve is the same thing as the Japanese central bank. So there's these words you're reading off that headline, which Mike was critical of it accurately. Bailout, it's an illusion, right? And I just read a Market Watch piece before coming on here. They're about to bail out mortgage and loan companies, right? So again, back to the system itself. The system is a oligarchical, monopolistic enterprise that conjures money to steal time and effort, right? Doesn't matter if it's in Japan, doesn't matter in the US. And the reason Mike is correct about the United States is because of us. We have not allowed the degree of debasement and buffoonery that other countries have allowed, right? We still have a modicum of what our forefathers intended. And that's why Mike is correct on that. And the dollar will continue to break things so long as we continue to function as a modestly civil society. Whereas, you've got really the replacement ratio in Japan just falling off a cliff, and all of these interventions. Mike, what do they do when they intervene? What does that mean?
Well, they're buying their own currency
With
and
what?
selling the dollar.
Right.
So, and it means they might be liquidating some U.S. T-bills to do that, which is, it doesn't really affect the T-bill market. People think it's the bond thing. It's not the long end. But they have to support their currencies, and they have reserves to do that. The biggest reserves in the world are in China. Why?
Follow-up question. Why do they have to support their currency?
What's their rate right now? Their rate in Japan is basically 0. In the U.S., it's 5%. So that means their currency has to depreciate over time. But also, it's just keeps moving. Well, the price of the yen, the value of the yen versus the dollar just is sliding. At some point, it's going to crush their economy. They need to stall that, or they're going to, it just crushes an economy, debasing currency. We've seen it happen, but the big one is China. And to me, China is the same thing that was Japan was 30 years ago.
what's interesting, though, is that these other countries who have to support their currency, we have Triflin's dilemma, right? We actually have to weaken our currency. So it's almost like it's cooked in. They target inflation because they have to, because it's cooked into the system. We have to weaken the dollar, or the dollar would weaken us. That's their biggest fear, right? They don't believe in the Jeff Booth narrative of how to create real economic productivity. I see what time it is, and I want to just make sure before you guys, this panel closes. Look at these guys up here talking all their macro, mumbo jumbo options. Like, what the hell, guys? Tell me something here. Okay, one more chart. This chart, one last look. If there's anything you can take away from this talk, look at how simple this is. You don't need sophisticated money market strategies to benefit from Bitcoin. You, as a retail self-custody person, can benefit from Bitcoin with just a 1%, 2.5%, 5% Bitcoin allocation. And if you could look on the bottom of the chart there, I couldn't even put it in because it skewed the chart so much. A 10% allocation, you're up 433% over the last 10 years, just having 10% of your portfolio. So we have touched on a lot of sophisticated strategies and ideas and yield curve and interest rates and printing and deflation, inflation, all this stuff. The most important thing to take away is Bitcoin should be part of your portfolio, because if it's not, your return is net negative. Mm-hmm. That's a reality.
All right. CJ, I got a question right here. Question, please.
Hi. My name is Oliver, and I would like to thank everybody for putting this event all together, first. Second, I really enjoyed the panel, and it's an amazing panel. I have some beliefs. I believe that Bitcoin is becoming the world reserve currency, as well as the largest democratic platform, uncorruptible in the world. This is happening, guys. So I've got two questions in one. First is, at what price in USD term would you concede? That's my wife. At what price would you concede? Yeah.
Hello.
At what price in USD term will you admit that Bitcoin is the world reserve currency? Big little hint. I know you're not good at math. $5 million per coin is 100 trillion.
2 million.
And secondly, what do we need to build today to make that happen? In terms of governance, in terms of societal changes, in terms of technical changes, what do we need to do today to make it happen? Thank you.
That's a great question because you said the reserve currency. I like to say the reserve currency of the internet economy, which is an aggregate economy of the world. So no one fiat currency tied to their economy, China, Japan, USA, is going to be able to outcompete an aggregate economy of the world. So it's a really important question to ask. And the next thing you think of is price. But people do this with gold all the time, don't they, Mike? They think about gold in terms of its monetary value instead of its commodity value. Maybe it takes $2,000 to pull an ounce of gold out of the ground, supply it to the marketplace, and you could buy it today for $2,300, $2,400. There's a small premium there, right? And we mentioned real estate as well. If you're going to invest in real estate, look at the cost of replacement.
Cost of carry, too.
What's the price of that house above
and maintenance.
Yeah, all of that carries into it. But I think to answer this question before we move on to you guys, because I'd like to hear all of your opinions too, I don't think the dollar value is almost irrelevant, right? It's almost going back to Bitcoin terms. Because what you're going to do is you're going to go from commodity value, where these cycles are based on how much it takes to earn a Bitcoin from that subsidy, to monetary value, which is what we heard Alex talking about earlier. Global GDP, which is human ingenuity, which is limitless. It's infinity divided by 21 million. That's where we're going. I don't think there's a price. You said 2 million, but I'd like to hear your thoughts on this. Where do we go with that price, and how do we get there to define that we've made that big move to reserve currency or reserve asset?
Yeah, that's a great question. First of all, I agree with the fact that, based on that analogy of miners and the overall price, there's actually, there's got to be some kind of productivity that actually delivers, value and creates that Bitcoin, right? That needs to happen. Right now, looking at our monetary policies right now, you don't need to put in that productivity to create, money, right? You just literally put that on a computer and boom, you have that. So that whole system is broken. And I think, focusing on that fact that there's actually needs to be a productive thing that needs to be done by a miner that causes energy to create, that Bitcoin is actually what's going to, drive the value for it. And then also on top of that, the use cases, right? So how many people are going to be actually using Bitcoin to transact is really going to, determine kind of where the price is going to be and how widespread it's going to be. Because at the end of the day, when, the mining rewards go down, we have more halvings, it's going to be up to the transaction amounts that has to happen on the network in order to keep incentivizing miners to continue to operate and keep up this network.
Very good. John?
So I'm going to take a little bit of a different angle on this. To think about Bitcoin in a sense of becoming the global world reserve asset, or the consensus on what we're going to all use to change our energy and exchange our energy with each other, it comes down to the human species on this planet Earth going from low vibrational energy and siloed approaches to societal structures to high vibrational energy and interconnectivity and free flow of human energy across our planet. What I mean by that is the system these guys are talking about up here, which, it causes a lot of people's eyes to close, quite frankly, because the system is a completely centralized, controlled, siloed system. The United States, Japan, Europe, China. 100 years ago, this world was a lot bigger than it is today. In today's world, we can, talk to anyone in the world in a second. We can send value to anyone in the world in a second. We can travel, pretty easily all across the world. It's a much smaller world today. 100 years ago and throughout entire human history, it was very easy for kings, queens, centralized entities, armies to control their people in a very tight societal structure, and they typically did it by controlling the money, right? But with the world we're going to, this transcendence from low vibration to high vibration, it needs a medium of exchange that we can all agree on, that we're going to transact our human energy in, and ideally that medium of exchange is not controlled by anybody, right? We don't want dollars because the central bank in the United States controls the value of dollars. We can't use yuan. We can't use any of these central bank currencies at the end of the day because very small groups of people sit in a room and decide all of our futures for us, right? So Bitcoin, from my perspective, or something very similar to it, we're not certain. This is technology we're talking about at the end of the day. We're not quite certain, but something like Bitcoin or Bitcoin itself is going to facilitate the transcendence of this entire planet to be able to exchange energy with each other without having to rely on someone to tell us when we can or when we can't, who we can or who we can't transact with. We don't have to worry about the confiscation from the military state all around the world. This is what brings Bitcoin to become the global world reserve asset. When you talk about pricing, we're talking about denominating against a fiat currency. Who cares about price? We're moving away from fiat currency. And at the end of the day, if the United States and these other major powers keep using fiat currency to perpetuate warfare and to perpetuate basically slavery of their people and perpetual servitude to some type of function, Bitcoin allows the common people to lead the revolution away from that centralized control, and that's what brings us to global hyper-Bitcoinization and Bitcoin being the global world reserve asset.
Here. I want to give you the math, and Michael backed me up on this. There's 4.1 quadrillion worth of derivatives. So where I came up with that number, not only is there confluence and extended trend lines and Fibonacci's that arrive at about 2 million, but if you assume we're going to do this peacefully, which is not an assumption I have, you need to replace the collateral layer. Bitcoin is not currency, it is collateral. It is designed to replace the central bank. Why do you need a central bank? You don't. But for global transactions, you need a trustless, permissionless, immutable layer to then transfer value. So 2 million times 21 million is what, right? Back out 1 over 100, which is the leverage ratio of most of these credit derivatives, and you can literally transfer that same exposure unlevered to the Bitcoin's blockchain at a 2 million USD price. Poof, we're done.
So we answered how, we answered why. One last thing is the when. The difference between inflation and hyperinflation in my studies is trust. So do you trust your government more today, or do you trust them more yesterday?
Man, they're so awesome.
They're abusing that trust, aren't they? That's where you want to keep your eyes on.
CJ, it's not the government, it's the central banks.
It's true.
The poor stewards of people who are housed by Congress, they're a reflection of the central bank.
Yeah. And they will abuse that trust until it's gone. So when you take away from what we did here today, remember, all you have to do to limit risk with Bitcoin is add it to your portfolio. And the more, the better. Thank you.
Fantastic. All right, thank you to incredible panel. Please follow up with them. Great conversations to be had. We're going to take a quick break, call it about 7-8 minutes, and we'll be right back with our third session before lunch.